We have free investors and loads of startups that want to understand how to get your money. And we also want to understand how to get your money. So we'll go bit by bit, but first I want to understand why Lithuania? Wouter, you live in London. Why?
What drew me here first? I'm not sure. I think the first time I came was for an event like this, actually. I'm not sure about you guys. And since then, we keep coming back every year. So, I'm back here now every quarter or so. We have a portfolio company here now. Yeah, we think the ecosystem has a huge amount to recommend itself. So, yeah.
Just to mention, Wouter is the only one on stage, besides me, that has investment in Lithuanian company Ovoko. So now let's grill the two that don't have investments in Lithuania, and you're here. Once we called one of them a tourist, because they come and they never invest, and they got so pissed and they actually started making a lot of effort. Kan, why are you in Lithuania?
First of all, thank you for motivating me and calling me a tourist. And that was right, looking back. So us as a fund, we invest at some of the earliest stages like you guys, and we invest in Eastern European founders that want to build global businesses with a focus on the US as an end market. And with our second fund that we're now investing out of, which is a 70 million euro vehicle, we added the Baltics for the first time, right? Like, my partner, Aaron, who had been investing in the Baltics before and had invested in TransferGo. So we had some experience of doing that, but I personally didn't. And as a tourist, you look into the Baltics and you see one country mainly, which is Estonia as the poster boy, right? And that's why, to start out, I spent a lot of time there, did investments there. But now I feel like the real opportunity is here, as I feel like they're in somewhat of a down cycle in the sense that they've had a lot of success, which may have pulled a bit of that hunger and aggressiveness out of the market. And that's why we see less deals as I'm seeing in Estonia. That's what kind of like pushed me, honestly, to come to Lithuania and spend a lot of time in the past 6 months, which I think has a lot of great companies that will breed a lot of new talent into the market.
Perfect. And Raul, for you, you're like seed Series A, right? And you are scouting for those companies here in Lithuania because you feel you've missed on some deals, or?
Definitely, I feel I missed on a couple. So thank you, Wouter, for reminding me every time I see you. I think for us, the strategy is pretty clear, right? We're a Series A investor, so our usual check is like 5-7 million, which means there aren't those many companies in the range and in the scope within a given geography. And what makes it super relevant to be on the ground is that you want to just be there when those kind of like building those relationships with founders that are earlier in their journey, so that when they actually go to raise those Series A's, you're there and they think about you. And so that's a little bit why we keep coming, and I keep coming like since, I don't know, a bit over a year now, quite frequently, just to build those relationships, like see which companies get in the scope for us so that we can support them in expanding their go-to-market strategies. And I'm just bullish on the region. I think amazing builders, people, and every, of course, there's densities related to how big a country is. So ideally, you just see the opportunities and you go ahead.
Yeah, imagine if you have come here like 12 years ago, maybe you would have had a chance to invest in Tesonet or something like that, but you didn't come in time.
I was in school.
Yeah, exactly. So out of all the countries, Wouter, how many countries do you look through?
Me personally, or us as a fund?
No, you personally.
God, we're quite small as a fund operationally. There's only really 4 of us on the permanent investment team. So we don't really split things up that rigidly between us. So we kind of, each of us goes where we want to go, basically. And I happen to like coming here. I like the people here. I like the kind of the culture here. So I come here. I go to Germany quite a lot. I go to Amsterdam quite a lot. I actually go to Southern Europe quite a lot as well. So yeah, it's a little bit artisanal the way that we do things at Pison anyway. I'm not sure whether you guys are similar or different ways of doing things.
I bump into you as well every week recently. Yeah, sorry, just jumping in. Same for us, right? I mean, we do have general, I would say, we try to be very generalist. So for me, geographically, I would pick a couple areas every year, but ultimately we work as a one team type of firm. So everyone kind of sources a bit everywhere, and as soon as it's in the scope.
And Kaan, you have, okay, now invested quite a lot in getting into this ecosystem. You're part of a lot of associations. You're spending so much time here. When would you say will be the time when you'll say, okay, I didn't invest in anything, we'll move to another region or country?
Well, I feel like as we had this conversation, as you said, like I've been looking into the Baltics for the last 3 years, but haven't been really looking into Lithuania, in the true sense of the word, right? Like for the past 6 months, I think I've been here like at least 5-6 times. And since we invest at the earliest of stages, like to be able to take really fast and big investment decisions, you have to cover the market to a 90%. And you have to know all the local gatekeepers, the angels, and the local funds, and we have to be able to do deals with you, which we've come close, as you know, a couple of times. And now I'm genuinely excited for the next couple of years in Lithuania. And we'll also be raising a new fund through next year, so we'll have fresh capital. And I think that's going to be the great timing with all these like amazing global companies like Cast AI, Vinted Liquidity maybe coming to the market through those secondaries as well. So we'll have a lot more new talent that we want to be here to invest with you guys in that talent and breed those global businesses.
Nice. And Wouter, moving to the fact that you have an investment here, and pretty good one, how much does that help to get access to better deals, do you think?
It's hard to say. I mean, we've only got the one here so far, so the proof's always in the pudding in VC. I think in the same way, I mean, it's a great company for us to have had the privilege to invest in, but we want to be very clear, right? There's still a lot to play for, and it's still early days, so we've got to see how things shake out. Yeah, I mean, look, for one thing, I'm here every quarter for board meetings, so like I'm here, and whenever I'm here, I try and catch up with people that I think are interesting and worth catching up with, and vice versa. Hopefully, people reach out to me if they know that I'm in town and want to catch up.
Okay, and question to all of you: do you feel you have lost or missed some deals? Maybe lost deals here in Lithuania. Kaan,
Yes.
I know it's painful for you. Yes.
Yes, I have. I have come close a couple of times, and that's one of the toughest part about the Baltics, right? Like looking into from like an Eastern European filter, Baltics is the most competitive place. Like in terms of the local, funding options, the local angels, they've had a lot of success. That's why they have a lot of money to plow back into the ecosystem. But then take countries like, for example, like Croatia, Bulgaria, Romania. There's a lot less competition compared to here. That's why, like, it's naturally like I could say like I was sort of like initiated as a VC by losing a deal to a UK fund in Estonia. That was going to be my like first term sheet in Estonia. And I lost it. I'm actually like thankful for it that I could, in my early VC days, I could see how intense the competition is and sort of like tune myself to that. And now that's why I try to be as often in the Baltics as this.
And I think for Diane?
For us, I think it's more that we made what seemed to be wrong decisions rather than really lost deals. Like it's the way we operate makes us kind of like very thoughtful with our investment processes. So I would say we're not the fastest, but we go with very high conviction. And sometimes due to that process, we just wouldn't kind of take certain risks that then looks like an obvious one you would have taken ex post, right? Luckily, when it comes to putting down a term sheet, we do have a very good, let's say, win rate on that. But it's, I would more put it on us being, not as convinced as we could have been on certain investment decisions at those times.
And that's specifically for Lithuanian companies?
I would say that the Ovoko Series A is a good example of that. Because, I mean, it was on our desk, we discussed it at length, and then we were like, but maybe, this market is tricky, the market size, the exit comps,
The existing investors are dodgy, all of that kind of stuff.
Well...
he doesn't want to be on board with you.
That's one that I would think of, but like in general, that is our way we operate in every market, so...
Doesn't sound good.
Well, it sounds good when you look at the portfolio, but like it doesn't feel good sometimes, yeah.
True. Wouter, do you have anything that you've lost here?
I would say nothing that we've kind of actively pursued and you know gotten to conviction on and then not ended up investing in. Not yet, but I mean you know it's relatively early days yet. So yeah.
True. But do you feel you put enough effort to get the best leads? And at least from my experience is that I think if you have good connection with other VC funds, they will show you something, how someone is performing and say like, you should definitely look at it. Do you feel that you have it? Other funds are sharing it? What's the strategy?
I find it hard to comment on stuff like this. Like I don't know. I'm not sure if I see like the kind of lead generation game as sort of as transactionally as that. In my mind, it's really just as simple as coming over here, having interesting conversations with interesting people, building genuinely fun relationships with genuinely fun people, and occasionally something will come out of that that's like a happy bonus. You know, I'm not sure I kind of track how many deals each person is bringing me or this source has delivered over the last quarter or things. I don't know. Basically, I have no idea. Yeah.
I love how you just stay cool when that thing is going on behind our back. I don't even know what's the sound.
Yeah, so for us, I tend to agree with Wouter there. I think one thing that you notice, and I'll speak specifically about this region, is like you get definitely a payback on effort. So it's one of those places which is, I think it's a very fair way, right? I mean, you have to be here, you have to show yourself, you have to show your interest in a way that is not transactional. And then what you're betting on is you're betting in an ecosystem. And so if let's say you're long on the ecosystem, what you hope is like by being here and like building those relationships, eventually you'll just be able to support the best founders at that stage. That makes sense. So similar, like I don't really track the KPIs. What I do notice is, you know, the more time I spend here, the more I feel I can build connection with founders via, you know, other investors that help me to introduce me to them, but also just, you know, like working on those relationships, hoping it's going to work out. Like that's really the bet we're making.
And Kaan, do you feel it's more worth it to join associations or just really stick for some nice dinners and get relationship?
I think at, again, the early stage, you have to do everything. Like you can't just go, if you're like a Series A fund or like a Series, you know, growth fund, you can go and meet all these earlier stage funds and, you know, get to know their portfolios and go off of that, basically meet all of them one by one on these trips. It's actually easier to, you know, set those meetings if you're like a growth fund. But as an early stage investor, you have to, you know, I got into that association just to be able to meet some of the, you know, top companies here so that I can build that relationship, maybe co-invest as angels with those guys, and then invest in some of the best people that come out of their companies. And then I obviously need to be in close contact with you guys to see if there are any live deals. And I have to do a lot of talent mapping as well, basically map all these top people at some of these later stage companies and build a relationship with them. Because, you know, coming back to that point of, you know, sharing deals with other VCs, there's this, like, theoretically, no one shares the best of the best deals, right? Like, they save them for themselves. That's why, as, you know, Wouter said, the best way to do it is just building genuine relationships and because the work will always be on you to build that trust and relationship with the founder at the end of the day. Because, you know, VC is a commodity, it's a product. And we have to sell it properly.
Yeah, once I've heard someone saying that I think they're sending us deals because they want to keep us distracted from good deals. So that's one VC talking about another. So that's probably also Kaan's point. But okay, so let's move a little bit now to startups because I think people came here to understand how to get your money, right? Or how to become interesting for you. And you've been around, there's one investment made, you want to make more investments. It's not that we don't have startups, right? There's a load of startups over here. So maybe first, like really very specifically, you can go one by one as you wish. What are you looking in the startup? So stage-wise, scalability-wise, is local fine, or you already want them to be like scaled to other countries? So go ahead.
I'm not sure I can answer it that accurately, but I think one general thing that I like in early stage companies in general, and particularly in this market, and I think this market has a lot that is conducive to this thing. It's basically, is essentially kind of a bootstrapping mentality from day one, and a real kind of focus on capital efficiency. And this market is great for that. I mean, you guys have a couple of really excellent pre-seed and seed and early stage funds, but by no means as many or as much capital is available at early stages as there is in like other regions in Western Europe. And I think that plays massively to the advantage of the companies here. You see so many more actually sensible businesses here at early stages of growth versus what you see in the rest of, well, in Western Europe, where because there is so much capital, people simply haven't learned to just run their businesses in a sensible and capitally efficient way. So that personally is something I really look out for, is people who just know how to run, instinctively almost know how to run really sensible businesses from day one. Shows that people will be able to run sensible businesses, on day 10, on day 12, on day 15, on day X.
That's actually an interesting observation that we compare like that to, I don't know what, London startups, right? So a lot of non-sensible businesses?
Look, not uniformly, but I think, yeah, as a trend, I would say there are just many, many more sensibly run businesses at early stages here than you find elsewhere. But
amazing.
Yeah, so for us, I mean, thinking through the lens of having to do our first investment in the region, what will be very important is that it's kind of like that core Series A. Like I find it, we would invest sometimes at late seed, but it's something we would do more as, like later investments by building into the ecosystem. So practically, core Series A for us means you have a go-to-market motion that starts to work, and that's the point that you need to throw more capital at it and like really scale that go-to-market motion to just leverage that initial product market fit that you found. In practice, it's a company that has, 50, 60, 70, 80K MRR onwards. But I also like a lot, and that's what I think that fascinates me about this region a little bit, what Wouter says. It's like this kind of like thoughtfulness around business models, because the market is not as liquid, the capital markets are not as liquid here, where you think, okay, cash is really important, and I really need to think that I might not raise when I want to raise. How am I going to think about my runway? Not everybody wants to play defensive and do bridges, right, all the time. So that's what I kind of like, the combination of those two things is definitely what we're looking for as an opportunity here.
So a little bit of a bootstrap mindset?
Yeah, definitely. Definitely. I mean, it doesn't have to be, but like for sure it helps to know you're kind of like mindful and know that, you're still... I'm Italian myself, right? Italy is very close to this regard for the entrepreneurs. It's like, if you're an entrepreneur in Italy and you want to build a company and look for money, basically people are going to look at you and not think about how good your company is, but like how good your business model is in generating money so that you have a reason to be backed, versus the more kind of tier one geographies where you have a good founder that came out of a company that everybody knows and they're going to just throw you a massive seed check. And then something in the back of that, yeah.
And I think it changes your path almost completely if you start raising from the very early on.
Yeah, for sure. But it's a mindset thing as well, yeah.
Khan?
Well, for us, I think one of the reasons why I struggled with investing in the Baltics in the first place was, so we as a fund, we're the only active like US investor in Eastern Europe, and we only invest in people that want to take on the US as an end market. And at times, like in the Baltics, there's such a burgeoning ecosystem, especially at the earliest of stages. Some great companies that people think that, like, as they do in San Francisco, they can go and sell to their entrepreneur friends, like these companies like, Katana, Fractory, that made it to Series A and B, and they want to raise their next rounds, their seed rounds, off of those contracts, as opposed to spending that time and trying to sell to a much larger US company, for example. That's why, for example, comparing the Baltics to Romania, for example, those guys, take that leap of faith and try to sell to those like larger economies much faster than the Baltic people. And yes, coming back to that bootstrapping point, maybe to be a bit, critical here as well. Yes, that's for sure, like compared to Western Europe and whatnot, definitely. But then, for example, in Croatia, like we see teams that are much more resourceful. Like with a lot less capital, they can go and get those like US contracts. And I feel like, the life standards here in the Baltics are much higher than those countries, which sometimes, makes people, I guess, inherently a bit more risk averse in that sense. And costs are much more expensive here compared to. So maybe I could suggest they can try to hire in some of these more southeastern European markets in terms of talent retention and cost basis, and be even more resourceful about what they can do from pre-seed to seed and to A.
That's actually a very interesting point. So you would say that Lithuania or maybe Baltic startups were already on par with European in terms of how expensive we are?
I think so. Like, you guys are definitely the closest. Like, from what I'm seeing from my portfolio as well, in terms of the team costs, and that kind of prevents sometimes some people to grow their teams because they're already somewhat expensive as like 4 or 5 people teams. But then, if you're in Turkey, if you're in Greece, if you're in Bulgaria, then that's another story. Like, you can get to a 15, 20 people team like easily, especially if you have some cash flow coming from your existing like US or UK contracts.
And how do you feel about, so some people say that a lot of investors come here because companies are cheap, like valuation-wise or ticket-wise. Would you agree?
We haven't invested for whatever it is now, like 2.5 years or so, right? So I wouldn't have a current view necessarily, but back then I wouldn't say it was necessarily cheap versus what we would have expected to pay elsewhere.
Pre-seed median is 4 million valuation, and seed 8 million valuation.
Okay. Yeah, I mean, that feels cheap, right? These things are always obviously relative to the metrics of each individual company that we're talking about. But in our case, what I can say is it seemed fair at the time and not kind of necessarily a discount to what we would pay in other regions. Yeah.
And I think compared to seed, those like median valuations may be closer to Western standards, whereas at A there may be a bigger divide and more opportunities here. Do you guys see that?
That's probably true. Yeah, I think so.
I mean, I think that we shouldn't think too much about those entry valuation medians, because ultimately in venture we all operate, if we operate successfully, with this power law concept. So you really have to be making your own calculations and like how big do you think the opportunity would ultimately be, because that's gonna change your game. So if you look at like what drives performance is 1 or 2 companies. And like missing a good company because you think, oh, there is a 1 million standard deviation on the entry price, I think it's just stupid.
Yeah. No, I completely agree. So I think the point is that maybe the reasoning for some people, they think that you are all coming here because we're like cheap and you can invest early. But I think you don't even come to those conversations if you're not excited about business, right? So it's very little about that.
I think you don't invest in a company because it's cheap.
Exactly.
But you might not invest in a good company because it's too expensive,
Which would usually be a mistake, exactly.
Which might be a mistake, but you don't know, right? Like, there is an upper boundary for this, right?
Yeah. How did you feel about Ovoko investment? Was it expensive then or no?
This is exactly the one I'm talking about, right? I think we felt at the time that it was a very fair kind of valuation to pay, and I think the team thought the same. Well, apparently the team thought the same, so yeah.
Okay, a little bit on the geography side. Yesterday I heard like some rumors that some IPOs are not happening in the Baltics. Because of borders with some really painful neighbors. How do you feel about investments here? So do you feel there is a risk on the region? Do you view it a bit more conservatively or you just don't care? Be honest.
Honestly, I think we talk about risk in VC, right? There's always risks. There's always kind of manifold risks that you're investing in, and this might be one as well. People might be more sensitive to it than others, or some might be more sensitive to it than others. I would say, look, I mean, one, it's a long-term game, all of this, and I think, 5, 8, 10 years down the line, who knows what the world's going to look like. So I'm not sure whether these are risks that we necessarily consider when we're making kind of investment decisions. I mean, sure, we're probably not going to invest in like China or like actually Russian startups, but stuff in regions like this, it doesn't even enter into the conversation really, I don't think, for us anyway.
Yeah, I mean, 100% tend to agree there. I think there is something in Europe that one needs to kind of take into account, that is, again, capital markets are not that liquid. So if you look at like the number of IPOs of tech companies in Europe compared to the US, it's just very liquid markets. There are some big assets that are still private, like Conto in France, a massive company, private for so many years. So It's rather where are you going to list? If you're doing great, I mean, can you list in the US if you get to that point? And if you're picking a European market, yeah, which one is it going to be? In 10 years, will we have a general Euronext for Europe that has enough liquidity, you know, to actually bring our companies listed here? That would be the exciting, for me, that's an exciting future to think about. But like, you can't think about the ship rocking for 2 years when you have 12 years holding periods, yeah.
Well, you know that I'm from Turkey, right? So like we also have our risks around our country. Like there are wars going on. There's been a coup in 2015, and I'm an ex-investment banker as well. And I worked on the largest IPO of the last 15 years in Turkey. And I remember those risks being quoted for sure. Like the currency risk, like we have 30% devaluation every year, and that company ended up IPOing at the end of the day. So I think that those risks, ebbs and flows, and I think that the markets were really bad, like after the, I guess, hangover from the low interest rates, and there's now a huge backlog of companies that are waiting for that IPO window to open in the US especially. So I think that when we get back to that liquidity mode on and those IPO bonanza period comes back, then there will be liquidity. So I wouldn't be too beaten down about it. Obviously, I'm not privy to the details, but I'm generally trying to be an optimist in this business, especially.
Yeah, and for early stage startups, when you invest, I think especially maybe for UConn, is there anything you ask them to do, like flip the company, move something, hire more outside?
Yeah,
but not necessarily for the like geographic reasons, talent and so on.
Yeah, I think that's why we formulated our thesis this way, right? Like the earlier they go and somehow get into that US, at least funding value chain, the American funding value chain, things go much faster. Like and getting to those contracts, getting there either physically or non-physically, you de-risk the company a lot. That's why like our main suggestion to them, obviously, if they're not building like a consumer company doing like mobile gaming, then that's your strength is being here and building your product cheaply and selling it to the rest of the world. But if it's like a B2B SaaS company, then the earlier you go and start getting into that culture, because it takes time, like just getting into that US West Coast mindset takes a lot of time. You have to be able to speak about Sunday night football with these guys and cheer for the 49ers in the Super Bowl.
Understand the rules.
Exactly, and even your English skills. I mean, one best thing about maybe the Baltics is English levels are off the charts here. Like we struggle a lot with that and building those like narrative skills with more Southeastern European founders. But here, that's great. But then culturally, it's a big challenge, and you have to see the Americans compete to understand what real competition is.
That's true. And Wouter, how do you feel about Avoko having majority, all of the team here in Lithuania, right? Because there are a lot of other markets. I think France is one of them. Would you say it makes sense to concentrate team and keep it here? Because we're super happy about it, obviously.
I feel great about it, yeah. I think the team feels great about it, which gives me confidence that it's the right decision. And beyond that, I mean, look, it's I think, great for, particularly for the development of a kind of corporate culture or startup culture, to have everybody under the same roof, at least at the very, very early stages, which this business still is at. And who knows what'll happen 5 years down the line or further down the line. But you only got to really, I mean, like, I think Thomas from Vinted was saying it yesterday as well when he was on stage, that was one of the big kind of strategic changes. He quoted that as one of the handful of, I think, 3 different strategic changes that he made when he moved, when he joined Vinted as CEO, was to relocate the business, well, refocus headcount kind of around the headquarters in Vilnius. So he seems to think that that's kind of one of the main pivotal changes he made at the early stages, and I think we'll try and keep it this way at Avoko for as long as possible, is what the team wants anyway. So.
You mean to scale them to other countries as well, or keep in Lithuania?
No, keep them in Lithuania.
Keep in Lithuania.
Yeah, I think so. That's the plan, apparently.
So, do you believe that, if, for example, you're opening French market, founders should go there, or someone should actually live for some time to understand it?
They might well have people on the ground there, I think, but it'll be kind of a minority, kind of a sales, let's call them a sales envoy or something like that, that'll be out there. But the main headquarters will always be here, I think. I mean, I'm speaking for the founders here. It's really not my decision ultimately.
Yeah, that's true. But you're on the board, no? You can push it. Okay, I think we are running out of time, and it's actually cold. So for those who will be going on stage, I was asked not to wear a jacket, and actually it's a little bit cold. How many meetings do you have planned with startups? How many startups are you meeting? Just shoot a number.
Less than 10, more than 5.
Okay. Today?
Yeah, today I think I have 5.
Okay. None?
I couldn't tell you. I think a few more than that, but somewhere in that region, yeah.
Always good to answer with a range.
Do you really have meetings? Okay, Khan, how many do you have?
I think with the more casual ones, I would say like 15 to 20. It's usually higher than that for me, but I flew here from Bits and Pretzels in Munich, and I've been doing this since Saturday, so my batteries are running out a bit.
Yeah,
but then it's always fun to be here, so I'm re-energized.
Yeah. But you see, early stage investors, they hustle like 15, 20 meetings in Series. They are like maybe 2.
No, so I said mine is probably within the region of like 10 to 15, I think, over the next 2
Okay.
days, something like that.
Amazing. No, it's amazing chatting with you. It's almost like chatting yesterday over the dinner. So if it was too informal, I'm sorry, but it's really great guys. You need to catch them because I think they'll be inside, not outside, enjoying some meetings and warm weather. And yeah, let's continue investing. Thank you.